Good afternoon, traders and investors. Will back here with another one, coming to you on a Saturday to do a Friday market recap here. We're going to recap the week for you guys. Hope you guys are having a beautiful holiday season if you celebrate. And if you're not, I hope you guys are having a beautiful week trading nonetheless. So without further ado, guys, let's get into today's video. We're going to do a breakdown here of our major indexes, our major tech names, of course, and lastly, a glimpse into my portfolio as usual to wrap up the week, see how we're doing. We're going to take a look at our PCE inflation data that came in on Friday, and boy, was it good here, guys. And then we're going to check to see if the markets are due for a potential rally into January after such a strong end to the year. So guys, let's get right into it. SPY up 0.2% on the day Friday, QQQ up 0.15%, and the markets overall did end green. We had a little bit of an intraday sell-off, but the markets were able to hold up gains for the most part here. You can see that on the heat map, the market was fairly broad once again, with only a few major outliers here, one of them being Nike after their earnings, and down about 12% on the day Friday here. So, but as a whole, guys, there was very decent rotation in the market. The rotation does continue, and a lot of your momentum is being caused by both growth stocks and value stocks in the Dow Jones at the same time. So really key here to keep this rotation going if you want to see the SPY continue to generate gains. On the one-day relative, you'll see here that everything pretty much in the green except for your consumer cyclicals, which had a little bit of a red day here. On the one day, everything looks a lot better though. Everything in the green for the most part, except for utilities. Utilities still kind of struggling here with the higher interest rate environment. So all in all, guys, was a very good week on the SPY. We did etch out some very decent gains, especially in tech. Tech has done a great job here of setting weekly uptrends, and I don't think that that is going to end anytime soon. At least the charts don't signal any type of big reversal yet. So what happened on Friday, guys? We're going to take a look here at our inflation. All right. So this is PCE inflation. It came out on Friday. The prices actually went down. They didn't just grow slower. So this is the first signs, guys, of disinflation. And this is absolutely a key metric here, right? So we were always focusing on the fact that inflation was coming down, but was still persistent. So prices were always going up, although they were going up ever slightly slower and slower as inflation year over year comes down. Now they actually went down for the first time, guys, since 2020. So take a look at this chart here that came out on Friday with the most updated PCE from November. You will see here that on a month over month change, we have not had true disinflation since 2020. And this was an absolutely huge read, guys. Economists were not expecting this one. They were expecting it to come in line, not negative. So this is very good. It's going to be very good for consumers as well. It may hint to a slowing economy, which really can add to the Federal Reserve's ability to decrease interest rates over the next year and two. So that is some very positive news. Yes, a bit of a slowdown in the economy is happening as prices come down, but that just means that the consumer will be all that more healthier indeed. So very good report. I was extremely happy when I saw this report as well coming out of the Federal Reserve here for the PCE data on Friday. Very good news overall here. And taking a look here, guys, at this last chart that was put together here, we do see that inflation just continues to fall. And here you see the negative print that was actually read in the month of November. So inflation now on a 12-month rolling basis has been excessively good in coming down towards the Fed target. You can now see that we got our first read in the 2% range for your core PCE. That is absolutely amazing. Everything, every single category pretty much coming down from your yearly highs, especially from the highs that we had in 2022. So everything trending well in the right direction. And that's what we wanted to see on the channel here, guys. That's part of the narrative. So once again, I will tell you that unless the data changes in a significant way, we will keep our bullish thesis in saying that asset prices will be very good benefactors of these decreases in inflation, decreases in interest rates as well next year. So that's why we do believe that the bull market is definitely here. So with all that said, guys, let's get into a bit of technical analysis, shall we? So we've had a very good month of November and December. You can see this on the monthly. We have a full monthly breakout at this point on SPY and on QQQ as well. The monthly breakouts are real at this point, so no signs of slowing down on the higher time frames. Bulls are in absolute full control of everything. You can see as well here, I have a nice little article. Investors dumped cash, bought stocks in December. This is from Bank of America. It just came out last week on December 19th here. So you'll see that investors are at their most overweight equities relative to cash since January of 2022. That's very good news. The big money is pouring back in. According to the survey of 219 participants with $611 billion of assets under management. So these are the large players here, guys. They're still overweight cash, but at their least overweight since April 2021, and they're most overweight on equities since February 2022. So this basically means that there's still a lot of cash on the sidelines, guys, and the big players in the market are getting ready to deploy that cash as the decrease in interest rates here and the attractiveness of bonds does continue. So they will continue to pour money from cash back into the bond market, back into equities, which will be good for assets overall. Extremely, extremely good here. You can see here this as well. Fund managers had the biggest overweight positions in bonds since 2009. And 45% of respondents said bonds were the asset class that would perform the best in 2024, aka everybody is expecting rates to come down and it will be very good for assets here. Coming off a beautiful year as well. You guys know that the SPY is up pretty much 20% year to date. You can see that pretty much all the way down here. Year to date gains of the S&P 500, 23.23%. So what happens usually after we have a 20% rally year? Well, it tends to significantly perform better in the year as well. So this is the year ahead S&P 500 returns after a 20% rally in the current year. You can see, guys, that as a whole, it is fairly bullish. There's only a few outlying years here, but on the most part, you can see that over 80%, 85% of all years afterwards do generate positive returns. And I don't think that next year will be any different, especially in light of the macro environment that we will have in 2024, guys. It's going to be very juicy with inflation coming down, rates coming down as well, and the consumer and the economy still relatively strong despite a few little tidbits of information here in terms of discretionary spending being a little bit down. The unemployment rate is significantly low right now as well. So people do have jobs. It's just they're being careful with their money. So we're in a very, very good environment currently. So next year, assets should be poised to rise as well. But we're going to have to target companies that won't be targets of disinflation. So we need to target companies, in other words, with low inventories and with high pricing power. So that being said, guys, the markets are looking good here on a fundamental basis. Now let's get into the technicals right away. So if you can see here on Friday, we are still struggling here at the top, which was previously reached on Wednesday, but the bulls are still in full control. You see it better on the futures chart because here we had a little bit of a dividend. So I will be using the futures for this one. So as you can see, guys, we're trying to set the daily higher lows as of Wednesday, and now the bulls are trying to resume this rally. This could go either one of two ways. The all-time high is very, very close, about 0.5% away. So the daily higher low is set currently, right? This level right here around 4,700 level is going to be the area to watch leading into next week. If the bears pull off a break of this level, you will have a daily downtrend in motion, and that would signify a bit of weekly consolidation. But that's okay, guys. The bulls have so much room to give back for weekly consolidation. You're going to be taking a look at this level here. 4,550 is going to be the area to watch. That's almost synonymous with your previous all-time high. So 4,600 down to 4,550 is going to be the area to watch for a technical area of support if ever the bulls set the daily downtrend. However, our lower time frames are still healthy. After Wednesday's technical sell-off here, we do now have the resumption of a 4-hour uptrend. So on the short-term basis, you'll want to keep an eye on this level here. 47.45-ish is going to be the target to watch. If they lose that, the bulls will lose their daily uptrend, open up the door for the bears to set a 4-hour downtrend right here and potentially reverse this into a daily downtrend, which would be the weekly consolidation. That is the bear case. The bull case is very easy. They just continue this 4-hour uptrend until we eclipse Wednesday's high levels. On the short-term time frames, the bulls are still in control, but getting kind of dicey here, right? Hourly downtrend was set early into Friday and maintaining that. So that's why I say, guys, this 47.45 level, which is your key on the 4-hour time frame, is going to be the line in the sand for me. So bulls currently in control. They do still control the daily, they do still control the weekly, and they are still in full control of the monthly. But are we going to be due for a little bit of a technical pullback here before the year end, potentially investors profit taking into the end of December and the early bit of January? Or will the rally just continue? That is what we're going to be on the lookout for. But in the worst case, guys, if we do get a pullback, just remember, even if it lasts a couple weeks, very, very healthy area of pullback here, guys. The bulls are in full control of your major timeframes, and that's what we want to see. Now, on the QQQs here, QQQs still battling with the all-time high levels. Can't really close hard above it like the Dow Jones has done in the past. So we'll be looking out for that coming into the next coming weeks here. So the bulls set the daily higher low here with this candle on Wednesday. 403.08 is going to be the line in the sand level to watch, and not yet able to push past Wednesday's high. So the daily uptrend is not yet reconfirmed, right? Still struggling about it, still struggling with it ever so slightly. But on the 4 hour, you can see it is currently a 4 hour uptrend. So we will be watching here, guys. Can the bulls maintain this 4 hour uptrend? Can they keep defending this 12 EMA that they have every single time they rally? And to keep an eye on your 12 EMA. So the next 2 weeks are going to be absolutely crucial, but I'll remind you once again for QQQ as well, even if the bears somehow manage to set the daily downtrend, that's fine. On the weekly, guys, we have so much space to give back here. Anything above 383 is just going to be for a weekly higher low for a potential further leg up here into 2024. And you can see the bulls are in absolute full control of this monthly uptrend as well. So if we do close hard in the month of December, nice green candle is here. Right here, I do believe the month of January will be very, very bullish as well. We will get that monthly follow-through continuation here, as traditionally, in terms of seasonality, the markets are very bullish in January. Now moving on to XLF, we'll take a closer look at that seasonality as we wrap up the month of December after next week. XLF Financials. XLF Financials doing a great job here of defending this red box area that I've been highlighting for the past couple of weeks at this point, right? The past 2 years of resistance. Well, now that the bulls are above it, they will be using it as support. So the bears had a bit of a daily downtrend here going. We're not able to crack through the 12 EMA. The bulls have held this 12 EMA ever since your monster rally came about in November, and we cracked through this resistance area. So now a bit normal that they're using it as support. So we will be watching for the same thing. If the bulls break 37.58 here, they will regain the potential for the reset of the daily uptrend. However, if the bears just continue here with this lower high and continue putting in lower lows, doesn't matter, guys. On the weekly, that will just be very healthy weekly consolidation. And you can see how much room they have. 31.39 is your low right here. Anything above that is going to be for a higher low for a potential further rally into 2021. And keep an eye on this, guys. Even if we do pull back for a couple weeks, end of December and early January, this whole area, 37 to 36, is going to be acting as massive resistance. It's going to be very, very tough for the bears to break through that. So we're going to keep an eye on this closely here, guys. Break of 37.60-ish, we are going to have the capacity to resume the bull trend to the north. But if we do get a little break here of Wednesday's low, 36.91, well, the daily downtrend just resumes by the bears. We are now into weekly consolidation. Very, very healthy area to be looking for some dip buying early 2024. So everything is looking very, very good here, guys. And on the monthly as well, you can see if we do close the month of December strong, we do have currently a monthly uptrend here. So I do think that that continues into 2024, especially with the rates coming down. Now moving on to XLV Healthcare. XLV Healthcare also looking fairly good. The bears had set the daily downtrend here, guys, for the first time in a while since the months of October, right? So they set the daily downtrend, but now what happened in the past 2 days, Thursday and Friday? The bulls came back with a vengeance, engulfing your second leg down. So now the bulls have a chance at the trend reversal. XLV Healthcare has been lagging behind the rest. So if the rest take a little bit of a break, I'd like to see XLV Healthcare still continue to run. We're going to be looking for the bulls to reverse this daily downtrend by setting a daily uptrend in motion. So now we need to watch the size of the pullback here, guys. If we do start pulling back next week, any pullback is going to be trying to set a higher low above 132.75-ish, set the higher low and set the daily uptrend and start targeting the upper end of this range right here, right? This range is the range that we've been trapped in XLV Healthcare since pretty much early April, right? So you can see it, this range, if I would extend the lines, it's a very, very nasty area of consolidation as well. Was resistance here in the past. Now we are battling with it as resistance once again here. On the weekly, let's say if we do pull back here, guys, if the bulls can't get it done and the bears just resume the daily downtrend for ever which reason, well, on the weekly, everything is really looking poised for a beautiful weekly higher low into further continuation here into 2024. You have your down, lower area of the range here that's going to be acting as support, 132.83. And then you also have your moving averages right down here around 131.20, guys. So everything looking very good for the bulls in the long term. And even on the monthly, guys, here, we're looking for the monthly breakout trend. So keep an eye on that on healthcare. Healthcare lagging a bit behind. So I'd like to see them pick up the pace a little bit here, especially if we get a bit of down here on QQQ and XLF into the next 2 weeks as investors profit take after a monster November and December. Now, IWM Russell really pulling ahead of everybody, setting the new daily uptrend, or rather daily uptrend continuation. It's been a daily uptrend the whole time pretty much. Higher highs, higher lows, higher highs once again for IWM Russell. So I'm going to be watching for the break above here. And if you do get the break above and clear close above this resistance area, guys, we're almost through it. If we do get through it here, guys, the next area of resistance is 208 all the way to about 212, this area right here. And then it's pretty much smooth sailing, guys, all the way up to your 215 to 225 area here. So going to be expecting a very beautiful leg up if the Russell can really clear this area in the next 2 weeks. Everything is looking very good for the Russell here, guys. So just keep an eye on that. Daily uptrend is maintained at this point. Any pullback is just looking for a higher low, anything above 196.30. Looking for the higher low, sit within this resistance area. Once again, use it as support and try to manifest the higher leg up on the weekly here, targeting all the way up here, guys, to about your 207, all the way up to about 215. Going to be targeting those guys as the next likely area of resistance. So very good job by the Russell here. But if for ever which reason, guys, we lose the daily uptrend and the bears set the daily downtrend, no problem at all. The weekly bulls have tons of space to give back here. Not even overbought on the weekly, not even really overbought that much on the daily anymore either. So if we do for some reason pull back on the daily, well, just going to be for a daily higher low, targeting the higher level here of your previous resistance. Now going to be support under $200, right? 198 to 195. Target this area as a likely area to pull back for the bulls before a potential second weekly leg higher. And that's really going to move the monthly candle up in a beautiful fashion in January as well here. Monthly breakout is almost complete by the bulls. If we can close this very hard in December to the bulls, well, then January is also probably going to be a very nice month of continuation for your growth bulls. Now, Dow Jones here. Dow Jones, you know, kind of sideways action here pretty much all week, right? With the exception of Wednesday, which was really a big down day. Dow Jones consolidating nicely at the top. And when you consolidate sideways, guys, look what happens to your RSI. Already starting to trend down. Still a little bit overbought here, but bulls with a ton of space here. So similar to the other indexes here, it's really Wednesday's candle that really sets everything apart. So we are looking for the daily higher low for further bull continuation, but the bears have an opportunity to set the daily downtrend. Your 4-hour time frames on most of these will be key. Can the bears set the 4-hour downtrends? Can they make the bulls lose this 12 EMA? All of these look the same. If they do, they could potentially set up the daily downtrend as well. Daily downtrend would not be any problem for your Dow Jones bulls. The weekly bulls are in full control. Look at this monster move off of your lows right here. Any consolidation here, guys, target your previous all-time highs. Very, very simple analysis. 36,850-ish all the way down to 36,400 is going to be your target area, where I do think the bulls have a very, very good chance of setting a weekly bull flag. If we do pull back late December and early January, you can set the daily bull flag here and really have a nice rally into January, profiting from that January effect and January bullishness overall in the market. So looking very good on the Dow Jones. Just remains to be seen here, guys, who is going to take over the mantle over next week and the first week of January. Will there be too much profit taking after such a monster rally? And then after the profit taking, are we going to resume our bull run to the upside? Or are the bulls just going to continue to power through the last week of December, Santa Claus rally, and then early January, hit the January effect and just continue this monthly outburst with the month of January, and then maybe have a little bit of a pullback here early February or maybe into March as well. So we're going to keep a close eye on all of those factors here, guys. But like I said, until anything major changes, until the bears are able to successfully set any daily downtrends, everything is looking just fine. Now let's move down to big tech. So moving down to big tech here, guys, we're going to take a look at Apple. Apple pulling down ever so slightly as well. So Apple is one of your names here currently in a daily downtrend. Apple hasn't really been in a daily downtrend, guys, for a long time, not at least a significant daily downtrend. The bears had a chance right here, weren't able to close below, but now the bears have set the daily downtrend, losing your 12 EMA on the daily as well. Daily downtrend, what does that mean? Weekly consolidation here, guys. So we have a bit of weekly consolidation here on Apple. Apple still in a beautiful weekly uptrend here, but keep an eye on this level here, guys. 188 is going to be the line in the sand for me. lose that and you lose the weekly uptrend. So it's going to be crucial to see, can the bulls protect the 188? Have beautiful horizontal support. That was all these guys right down here, right? You can see this area right here, 189 to 88. That is going to be the area that we're going to be targeting for support. And as well, that is going to be the location of your 12 EMA on the weekly. So need the bulls to protect this area with their lives. They want to have a chance at maintaining this current weekly uptrend that we're in. So as of now, the bears do have short-term control here. Right? Apple no longer overbought, obviously on the daily, and on the 4 hours in full bear control as well, 4 hour downtrend. So need the bulls to start reversing this 4 hour downtrend. Only then will you know that a nice daily bounce is underway. Give the bulls the capacity. But as of now, guys, Apple is fairly still strong. Yes, they struggled a bit with the all-time highs. We will see how long this weekly pullback lasts. But one thing's for sure, guys, 188 is the big target that I'm looking at too. In terms of the monthly here, need to see how Apple bulls are going to close this monthly. Are we going to get a double top right here and then put pressure on the bulls for more move higher in January? Or will the bulls be able to recover this daily downtrend into the last week of December, potentially get this candle to close a little bit higher, which would give the monthly breakout past the all-time highs a bit more momentum as well. So Apple, one that's kind of on the rocks right now, struggling a little bit with this previous all-time high, struggling a little bit with its negative media headlines this past week with the Apple Watch. So we will see, can they reverse this? One thing's for sure, guys, if for ever which reason we lose the 187 and start dipping all the way back to low 180s to high 170s, I'm definitely going to be adding some shares of Apple in the swing trade account by the form of short put options. Now moving on to AMD, guys. AMD looking fairly decent as well here, okay? So AMD, one of my favorite stocks here as of recently, right? Because of how undervalued they were to the rest of the semiconductor industry. Now that they've released a competitive product with NVIDIA, you've seen what has happened, guys. They've absolutely come on a tear here in their second leg of this weekly uptrend here. So AMD looking very, very good. Recovered nicely after Wednesday's sell-off here. So Wednesday is the daily higher low here. Any move back is just going to be looking for a daily higher low for further uptrend continuation as soon as this move tops out, right? Just going to be looking for a daily higher low, and this is going to be the higher low position. If for ever which reason the bulls roll over and give the bears the daily downtrend here, well, that will just be healthy weekly consolidation here, guys, right? You saw the weekly consolidation here a little bit. Boom, leg up. Now, if we get a little bit of weekly consolidation, guys, I will be buying AMD here. 132 all the way down to 126 is my target. That is your previous 52-week high area as well. So I'm going to be looking to pick up some AMD. If for ever which reason the bulls lose this, give it to the bears. I will be shopping in this area. I do think it's just for a very healthy weekly higher low. Anything pretty much above 116, just going to be looking for a weekly higher low for further continuation into 2024. No red flags for AMD. AMD is currently in full monthly breakout mode at this point. So we'll see how they tackle the end of January here. Looking very, very, very good, guys. You saw EPS growth for the next 5 years is going to be very, very high indeed here. So very, very looking forward to seeing how AMD is going to manage expectations leading into next year, especially with this, with what they're going to be releasing here. Look at this EPS growth. Right? Look at this beautiful EPS growth for the next 5 years. You don't see 2027, but 2027 is also going to be a very monster year. They're attacking new verticals similar to NVIDIA. So looking forward to seeing what AMD can do, but definitely one of my favorite stocks on the watch list right now. Now moving on to Amazon. Amazon consolidating ever so slightly pretty much for the better part of last week after a very decent Monday, kind of pulled sideways for the rest of the week here, but that's okay. This is pretty much a bull flag, right? So looking very good. Any move down below, just hunting for the daily higher low, anything above 143.66, looking for the daily higher low. This is currently a daily bull flag. I'm expecting the bulls to really be able to run with this here, guys. Why? You see it better on the weekly. I've been targeting this pretty much. I've been highlighting this for the past couple of weeks. If Amazon was able to break out of this area right here, the 145 all the way down to the 140 range, well, the bulls were set up beautifully for leg number 2 up on the weekly, and that's exactly what we got here. So everything looking very, very bullish for the bulls. Beautiful sideways consolidation, not overbought on the daily time frame either. And if for some reason we do continue to pull back lower, this whole area, guys, is going to be very tough for the bears to break through here, guys. 149 all the way down to 144 at this point is going to be your target range for potential support for the bulls. So if ever we're not able to continue this daily uptrend and the bears set a little bit of a daily downtrend here leading in this area, that's fine, guys. It's just a very healthy little bit of weekly consolidation here before a potential further leg higher. And Amazon on the monthly shows it best. Full breakout mode. That's why my lean is bullish. I do think that they'll just be able to continue this weekly uptrend into the next couple of weeks without much resistance here by the bear. So looking very good on Amazon. Amazon price targets that we are looking for here, guys. I'll remind you 165 to 170 is going to be the target that we're looking for here. Now moving down to Google. So Google looking very good as well here, guys. Google pulling all the way up almost into the 143 area after having lost the daily uptrend into here. We are now back in full daily upswing mode by Google bulls. So daily uptrend has been recaptured. Any move down below at this point, guys, if we do top out this little bit of a rally, we are just looking for a daily higher low, anything above 131.35, looking for the daily higher low for further bull continuation here. Keep an eye on this previous area, guys, 139, 140-ish. That's going to be the area of support that the bulls are going to be able to use now that we've broken through that as resistance. And now we're kind of pretty much above our 52-week highs as well. Google having set previous 52-week highs here pretty much all week, first on Wednesday and now second on Friday. So very, very happy that we're slightly above here our previous 52-week high of about 142.20, now above that into the high 142s. And I've been calling this for a while here, guys, right? Google was looking poised for the breakout. They are looking very good on a fundamental valuation basis. Inverse head and shoulders, now breaking bull. So the next stop for Google pretty much, guys, is going to be at this point, your all-time high area of resistance. 149 to 152 is the area. Now that we've broken through this whole area of congestion here, this lower 140s range, we are going to be able to move higher on Google here. And look at this beautiful monthly uptrend breakout here that's forming here. So looking forward to see a good end of the month on Google. Only really 1 week left here to end the month on a positive note. So I will be holding my Google swing trade position as well here, looking very, very good. Looking forward to seeing how much of this weekly breakout here can we continue for the bulls here. Weekly bullishness is really, really, really looking good here. Weekly uptrend is confirmed. I just showed you the monthly uptrend is confirmed as well. And now the daily bulls have full control. So daily bulls in full control of every single time frame on Google. After Google having lagged behind the rest of big tech for a while, it's now starting to take a bit of a lead. Now moving on to Meta. Meta looking absolutely gorgeous here, guys, right? Meta getting very, very close to its last leg up before the all-time highs, right? So we're pretty much through this last area of resistance right here, which is your 350 zone. We're at about 353, 354 right now. Your next area of resistance on the weekly, guys, is the all-time highs, 383. There's nothing between 353 and the all-time high. So that's going to be the next area that we are going to be targeting here. Meta bulls are in full control right now. Look at this beautiful daily uptrend right here. Last leg that pushed us higher here. Any single move lower, let's say this move tops out right now, anything above 328.61, just looking for a daily higher low for further bull continuation here. No red flags at all. Keep an eye on this area right here, right? 343. Horizontal previous resistance, going to be current support if the bulls do come down there, and we have the 12 EMA as support. No red flags on Meta whatsoever. Meta looking very, very good, even looking amazing on the weekly here as well here, guys. Look at this beautiful weekly breakout by Meta bulls, and obviously on the monthly as well. Monthly uptrend is confirmed, now targeting your all-time high. So Meta looking very, very good. Unfortunately, I just can't buy it up here at current valuation, so I would need more of a dip personally. Moving on to Microsoft here, guys. Microsoft looking very poised for a potential bullish breakout as well here. So we've been taking a very close eye on this tight range that's been forming for the better part of the last 3 weeks of trading here. We were keeping an eye here, guys, on two levels. I'll remind you, the 363 level is going to be the break of the range to the downside here. And obviously to the upside, you have your 377.50 level that's going to come in right here, guys. So we're kind of trapped in a range similar to how Tesla was, but with the bullish lean on the markets as a whole and with the bullishness of the higher time frames. I'll remind you, Microsoft is in a beautiful weekly uptrend right here, just looking for a weekly bull flag into potential weekly further consolidation. I mean, continuation here into 2024. That's what gives me a bullish lean for the range breakout here. Monthly chart is looking beautiful on Microsoft as well. So no reason for the company potentially to slow down. Fundamentals are looking very attractive as well. That's why it gives us a bullish lean on this range break. If we do, however, break the range to the downside here, give the daily downtrend to the bears, no problem at all, guys. It will still just be healthy weekly consolidation at that point, guys. Target this area right here for potential swing trades. 355 down to 340 will be my previous area where I will be looking to maybe add some Microsoft in terms of swing trades here. This is going to be your previous all-time high resistance, which will now be acting as very, very, very strong support. So we will see, can the bulls just break out and continue into a new daily uptrend here and really set the potential third leg of this weekly move higher here and really catapult the bulls to continuous new all-time highs off this monthly breakout pattern as well? Or will we break down further, get a decent little buying opportunity here in January before continuing Microsoft's rise into 2024? No red flags for the company here. Valuation isn't too expensive. It is up there here, but Microsoft will be growing very healthily next year as well. Very curious to see how they're going to further monetize their open AI division as well. Now moving on to NVIDIA. NVIDIA looking fairly decent here, guys, right? Obviously came off of a double top of your all-time high area right here. So NVIDIA currently still hunting for the daily higher low. Pretty sure that it was set Wednesday. Now, if the bears put a break here and set us up into a daily downtrend, your weekly is going to be a very tight range here, guys. The key level for me on NVIDIA right now is this 453 weekly higher low. So wanted to see the bulls push through the all-time high this week or potentially next week as well to really give them the best chance here of the monthly breakout pattern, right? We're waiting for this monthly uptrend breakout. We've been waiting for it for a while, but bulls unable to follow through. So key level, guys, I'll remind you once again on NVIDIA, weekly level 453.97-ish, right? 453.97 all the way down to about 453 is going to be the area to watch. Line in the sand level for me. Yes, it's good previous resistance here, which is now going to be acting as support as well. So the bulls should be able to maintain that, but we will see. Can the bulls get it done next week? Can we reset this daily uptrend here, or will the bears take over here and set us up into a daily downtrend, which would mean very tight weekly consolidation range here? And then we're going to be keeping a close eye on 453 with how bullish the rest of the market is and how bullish semiconductors are looking into 2024. Would not surprise me if NVIDIA is really able to, at worst, keep this tight for a later weekly and monthly breakout. But the best case scenario is obviously for the bulls to get in gear early next week here and really set this in motion, crack your all-time highs as well here, guys. So keep a close eye on that for NVIDIA. Those are the two levels to watch. Now moving on to Tesla. Tesla performing very decently last week here after Wednesday's sell-off came right back up to your highs around 257, 258 and selling back intraday Friday all the way down to 252. That's fine here, guys, as long as we maintain above this range right here that was previously set, right? So this is pretty much your 247-ish all the way down to roughly 230. That's going to be the area to watch. Now that the bulls have broken that to the upside, we're just looking for daily uptrend continuation here. Higher low is set right now. Wednesday's low, 246.88, the area to watch, guys. Similar to the indexes, Wednesday really put in motion higher lows for all stocks and all indexes, right? So now same thing applies. If the bears break Wednesday's lows, we will have a daily downtrend. At that point, it will be weekly consolidation here, and the bulls have only really got 1 week of breakout, and they would not like to see weekly consolidation right away. That would be pretty much a look above your range and then come right back below into it, right? So that would be the worst case scenario for the bulls. The best case scenario for the bulls is obviously breaking your Wednesday highs, 259.23, continuing this daily uptrend here for one extra leg up here into our resistance area of 268, 269. I think that that's the most likely scenario here. Bullish seasonality, bullish rest of the markets, but we will see how it plays out next week. Early will be absolutely crucial. We'd like to see the bulls push this weekly uptrend here, at least into your high 260s to really give them the best chance after that at higher consolidation, higher low, and then potentially move higher towards your 300 target. So the bulls are looking on decent on Tesla here, but for every which reason we lose this and come back within our range, guys, I'm going to be writing puts here. Pretty much 235 down to 230 will be the sweet spot that I'm targeting, the lower end of this range. But for now, looking good. Bulls still able to maintain above that, right? So keep an eye, guys, on your lower timeframes across everything, right? 4-hour timeframes are crucial. Can the bulls reset the 4-hour uptrends here on pretty much everything after such a disastrous Wednesday, or will the bears be able to take over? Now moving on to Palantir. Palantir looking fairly dicey, right? 17.14 down to 17 is the area to watch. We've been saying this, guys, for the past 2 weeks, right? Bears with a very nice daily downtrend. The bulls tried to reverse it, but now the bears have engulfed them once again. So this area is going to be absolutely crucial. Let me take this off. So just clean it up a little bit, right? This area right here is going to be very crucial for the bulls. If you lose that here, guys, the problem is that, yes, it is still weekly consolidation, still looking for a weekly higher low, anything compared to 1452, just looking for a weekly higher low for bullish continuation here. But the problem is with how much of this move the bears have taken back. The bears have already taken back 62% of this move. This is the area to which if we go beyond this, becomes very hard for the bulls to V-shape this. You saw what happened back here when the bears engulfed the entire move. Look how long it took the bulls to reset into a weekly uptrend, right? So the worst case scenario for the bulls is losing this level more and more, could set up for just a bit of a tightening range here, could set up for a longer time before you really can continue a weekly uptrend or even get it back, right? If you hold above this level, they still have a chance at keeping this V-shaped recovery alive and just continue this weekly uptrend to the upside. So that's the key thing on Palantir that we will be watching here over the short term. Yes, 18 to 17 is a decent buying area. Bulls have been using it as support here. You can't really see it that clearly on the daily, but on the weekly, you can see why here, guys. This has been 17 to 18 area really is a crucial point that the bulls have been defending now at this point, right? Because why? It was previous resistance here a lot in the past, previous resistance here. Yes, you had this spike through, but now just focus on this area, right? Resistance here. And now the bulls are trying desperately to use this same area as support. That's why it's been so challenging for the bears to try to break through this. So I am still overall bullish on Palantir, especially at these lower levels. I do have some shares here that we've been playing on the swing trades here, 17 to 18 for the past couple of weeks at this point. For every which reason we lose it and come back down into the 16, even $15 range, that is still a good buy for me, guys, right? So even at that, we will still be looking for your potentially monthly breakout. Even if we do come down here a bit in the month of January as well, I will be looking to shop for Palantir. I do believe Palantir 2024 is going to be an amazing year for the company, and their company is really growing very nicely. And if interest rates come down, it's going to help them even more. They've been onboarding tons of clients as of recently, so everything looking very bullish fundamentally for the company. Now, lastly, PayPal. PayPal just doing PayPal things pretty much, right? Sideways consolidation. We've shown it once on the channel. We'll show it again. 2 days up, sideways consolidation. 2 days up, sideways consolidation. 2 days up, sideways consolidation for about a week and a half, right? Here is no different. 2 days of upside, sideways consolidation. But this is pretty much a bull flag once again, right? So really tightening up. No loss of the 12 EMA right here. That's what you want to see. Bulls protecting the daily uptrend here. At this point, we're really just waiting for the weekly breakout, right? So breakout level would be pretty much above 65, 68. This previous weekly high here, look, weekly downtrend was set in motion, so we need to take this guy out. If we do take out 65, 68, it opens up the door here for a beautiful weekly higher low for weekly uptrend reversal. We have not had a weekly uptrend reversal here on PayPal here since pretty much the month of May, where they did it right here in that fashion. Right? So we're going to be looking out for that closely on PayPal. No red flags as of yet here, guys, but keep a close eye on your 6081. 6081 would mean the bears have pretty much taken over the daily downtrend at that point, and we will already be into weekly consolidation. The one good thing about if we hit weekly consolidation right away is how much of this down move the bulls have taken back already, right? We already have a good capacity to set a weekly higher low and then reverse this into a weekly uptrend into 2024. PayPal, obviously a stock that is greatly affected by interest rates. So should interest rates come down early next year, I do believe this stock is poised for a very beautiful rally here. I'm expecting over 2024, I do really think that PayPal can get back in the high 70s to $80 range right here that we've been targeting. That is pretty much my conservative target. My really optimistic target is getting to the high 90s and back to 100, really setting us up for a potential monthly uptrend reversal, but those things do take time. So first couple of targets to the upside remain the $70 range, and then we will take it from there. That's pretty much everything I had for you on the technical aspect, guys. Now let's take a look at my portfolio. So portfolio is currently standing at still about 70.5%. Very, very good end to the week here, even though we did get assigned a few shares of Nike. I have written some covered calls on a lot of positions for next week, so we'll take a look at that. S&P 500 closing the week pretty much almost 24%. So we're almost 3xing the S&P 500. Let's see how much we can get out of this last remaining week here. And against the NASDAQ composite here, you can see, guys, that we are outperforming the NASDAQ here, 70.5% on the week. NASDAQ only up about 44, potentially 45% here on the close of Monday. So we'll see how that goes, but very good year so far. Portfolio currently at all-time highs for the year. And also keep in mind that we have withdrawn 15% of the portfolio. So our true gains on the year are about 85% running the put wheel strategy. Same strategy that I run every single week here, guys. Now, in terms of our positions here, so let's go over everything that ended worthless first, right? Okay, so Tesla, we had the 245 puts that we wrote earlier in the week for about $1.45, $1.50. Those ended worthless, so we were just pretty much collecting all the premium on those. These Starbucks 99 calls as well that I wrote on Starbucks here, we got assigned some Starbucks positions here. Well, actually 100 shares of Starbucks earlier last week here at $97. We got assigned for 22 cents and we wrote the calls last week for the 99s here for 26 cents. Our break even on Starbucks is now down to 96.72. Company trading not too far away from that, 95.28. Going to be looking for a potential rally on Starbucks before writing any more covered calls. Now moving down to Palantir. Palantir was actually an assigned position. So Palantir, I had 2 contracts for 18 puts. We actually got 44 cents on those puts here. So let me show you what happens on Palantir at this point. Palantir got assigned 200 shares at $18. We got 44 cent credit for those $18 puts. So our break even on Palantir is currently $17.56. Price is not too far above that, below that right now. So we will be looking for a potential daily recovery rally here on Palantir before looking to sell any covered calls. Now we did have another Palantir position last week. So Palantir, we did close 17.5 puts that we had from earlier on in the week. So if you can see down here, I'm not sure if they're still available, but if you check the video from yesterday or from Thursday rather, you will see that I did have Palantir 17.5 puts. We got them last week for pretty much 24 cents each. And you can see I bought them to close end of the day here on Friday, and I'll replace them with some for next week. So we bought them to close. We got about 24 cents for them initially, and we were able to get 5 cents back for them. So total pocket was about 18 cents, which is good. That's about 1%, right? The 1% rule would be about 18 cents. That's exactly what we got. And you can see that we replaced them for 17.5 puts next week. Now, these are pretty much at the money, right? Palantir was ending under 17.5. So we will see if we can pocket this entire 40 cents premium on 6 contracts here for next Friday if Palantir closes above 17.5. If they close below, well, we'll just reduce our existing average cost of Palantir shares that we got at 18 with pretty much an average in with this position right here. In terms of the 18 calls that you see right here, well, that's very simple here, guys, right? So Palantir, I benefited from having 200 shares assigned at 18, so I kind of jumped the gun on those. I wrote $18 calls on them right away because the premium was really good here. We were getting about 22 cents. You can see that right here for next week, 18. So if those get called away, so be it, guys. I will continue to write Palantir shares as long as we stay down here in this juicy sweet spot, 18 to 17. Really looking to milk the premium on a weekly basis. We've been doing it now for a better part of the last 3 to 4 weeks. And now lastly here, guys, CELH, pretty much CELH, well, they ended above our target here. So CELH, all the premium that we had from last week here, 48.33. You can see here, guys, that we got about 45 cents for them last week, and they currently ended worthless once again here. So CLH ending above $50. So I've just been milking the heck out of this $50 to $48 range here. Very, very good area of weekly support, which we have talked a lot about on the channel here. So no surprise there. Contracts ended worthless. We pocket the premium. Nike, the 113s I did get assigned here. So keep an eye on Nike. Nike, obviously after the very bad earnings here, we did get assigned here the shares that I did right at 113. We got about 87 cents as a net credit for those. So now our break even is about 112.13. So we will be looking for a bit of a Nike recovery. Nike not currently in an area where we can write covered calls. It's just not close enough. So going to be looking for this earnings drawdown to bottom out here. If ever which reason, guys, we dip below it to the $100 down to $90 range, that is where I will be averaging on Nike. But so far, looking fairly decent here, guys. Going to be looking to protect this level here. 104.35 is crucial. That is your weekly higher low to really maintain the capacity of this weekly uptrend. But with such a heavy pullback, guys, may just turn into a tightening range here, maybe for the next quarter here, right? So going to be looking to keep my Nike shares. Very happy with the level that we got some. I will be shopping for more if ever we dip a bit more here, guys. That's pretty much it for the positions here. Google as well. So you'll see that I did write another set of covered calls here. So CSIQ covered them up a little bit here. We got 40 cents for writing the $26 calls here. So CSIQ, we got assigned all the way previously at 35. We brought the break even down to 28.08. I should adjust that to the downside here, guys, because we did get another additional 40 cents here on the credit. So that would pretty much be like 27.68 is going to be the new break even. So let's put that in right away. 27.68 is our new break even. And I wrote the 26s. If for ever which reason the market pulls back next week here, guys, I do think that CSIQ, after such a nice rally, will potentially have a pullback as well. And I just want to protect a lot of the gains that we got coming off of our lower levels here. If for ever which reason we go above 26 next dollar and these covered calls end up in the money here, guys, that's okay. There's going to be a lot of premium on the contracts, and I do believe I'll be able to roll them for a profit. So we're really trying to lock in the gains that we've had so far and minimize the potential to increase the loss ever so further. So we're going to keep a close eye on how this position does play out. Keep an eye that I am writing covered calls under my break even, right? My break even is 27.68. I wrote the 26s. So I do believe that I'll be able to manage a bit of premium here, really get this loss back to par, but we're almost back to break even on CSIQ. And now lastly here, guys, the Google 141's calls that you guys do see, that is a roll. So I had the Google 140 calls for last week, and you can see that right here. We're going to pull up the chart for Google. So Google, we had the 140 calls. You'll see the premium that I did collect on the stock ever since being assigned at 134. So 134, we got 15 cents for that put. And then on the 140 calls that we wrote pretty much for last week ending, we got $1.04. Now I looked at the contracts on Friday and I had a decision to make. Do I close the calls? Do I roll the calls? Or do I get called away? I chose to roll the calls. I got an additional 8 cents for going up one strike. So instead of being at the 140, we're now at the 141. So we have a potential to gain an extra $100 and we got an 8-cent credit on top of that. So a full 108 extra dollars could be the potential if Google ends above 141 come Friday. That would be a very nice gain. Our average cost with all of that altogether is 132.73. So we're pretty much almost up $1,000 on Google right now. Really, really, really liking this price action. But if we do pull back on this leg, that's where I'll be able to really maybe get out of these 141 covered calls, cover them at a profit, and then just let the stock ride into its next weekly gain. So looking very good on Google indeed. Just chose to protect a lot of profits coming into this week. Don't want to see the account dip too much. So any position that's ran a little bit, I'm choosing to get a little bit more conservative on protecting the profits. And we still have a lot of the swing trades here, guys. Adobe, still have those shares. Amazon, still have those shares. TMF, Oracle, still have those shares as well, looking for them to come into profit. Bitcoin and Ethereum haven't built out the position any further, still have the same 500 initial that we invested into it about a couple of weeks ago. Baba still holding the shares, not in covered call territory just yet, but Baba, we're doing very good on managing the position here, guys, with all the additional puts that we've written on them, right? Our premium has come down a lot. We're down to about 79.85 in break even, so I'm going to be looking for it to head above towards 82 before writing covered calls on it. Now, lastly, guys, the last few, CP, you can see CP has absolutely had a very tremendous rally here right now. We're up pretty much $750 on that position. Going to keep this position, even though we got a sign, guys, not looking to write covered calls on it just yet. Want to be a bit greedy on this one because fundamentals are amazing, and I do think it's due for more of a breakout. Here, the Google shares, the Nike shares I just got assigned, the Starbucks shares that were still assigned as well, the 200 Palantir that we just picked up, our PayPal shares that we're still riding, CSIQ still in those as well, and my Canadian banking shares down here as well. So a lot of positions here, guys, that we haven't rolled out of yet. So we're going to be looking to do that over the month of January if the market does permit here and really consolidate a lot of those gains, get some fresh buying power back. But I got such good levels on a lot of these stocks, guys, that I'm tempted to ride them a bit higher before writing covered calls, trying to juice the most out of the strategy as possible when I'm happy with my assigned levels and the markets are good. So that's pretty much everything I had for you guys today. Hope you enjoyed the video and the lengthy portfolio breakdown. As usual, if you have any questions or whatsoever, feel free to leave them down below in the comment section, guys. TA, macro, option stocks, you guys know it. Just leave it down below and I'll get back to you as soon as possible. As always, thank you for watching the video, guys. If you did enjoy it, consider dropping a like, really helps me out. And consider subscribing to the channel if you're new. We'd love to have you here, guys. Really a pleasure doing these videos for each and every one of you guys. Thank you so much again for the 500 subscribers. Now let's get it to 1,000, hopefully. So take care, guys. I'll see you soon. And once again, happy holidays and have a great weekend. Take care and peace.